Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So today in the weekly report, we have taken a look at both on the longer term view and the shorter term view. While in the shorter term, it is relatively clear what to expect on euro currency, and that's what will be the subject of this video. On the longer term perspective, guys, situation tends to be tricky because markets forming a bit contradictory factors. So first of all, if you will take a look at the recent CFTC report, you will see that the net short position have decreased on euro currency, not only on euro but on Great British pound as well. But this is a bit different story. And on the euro currency, we see the rising of the open interest. It means that the decreasing of the net short is triggered not by just covering of the shorts, but by opening the new longs as well. So hedgers decrease their positions almost by the zero. It means that markets and then international traders, international companies who stand under impact of the forex market risk factor, that when they have to deal with international trade, they do not expect the big depreciation of the euro currency, because their hedging position stands near zero. So that's what we have from the one point of view. From another point of view, we have the decrease in action on the euro, and we see the statistics. And statistics this week was in favor of the United States, because they keep moderately positive level for the statistics. While on the euro currency, we see the bad numbers on the inflation, on the retail sales, in general on the sentiment, the same on the Great British pound. And this makes overall situation is a bit tricky in the in nearest time. In general speaking, on the longer term perspective, on the year, for example, on this year, we suggest that euro could rise only in the 2 moments if it will show relative improvement of the economy compares to current situation and current balance to the United States dollar, United States economy, when we will see clear, definite improving of the inflation, gross domestic product, retail sales, sentiment, at least some improvement in the euro, and that will be also in the statement of the European Central Bank. So in this case, euro could rise. Second condition that we have to meet by our view is that United States should not impose any tariffs on the European Union. So if this will happen, well, that will lead to the depression of the euro currency. So that's the moment that market should complete to show the appreciation in this year. Currently, guys, we do not see any of these points that are yet to be started. Even more, last week I suppose that could be treated probably in favor of the bears, especially if we'll take a look at the monthly, in the monthly and on the weekly chart. So, but you could read the report as usual, so some information you could get. Now, about the short-term perspective. Actually, guys, in last week, all setups that we have discussed has worked really nice. That happens almost every time when market is driving by its own factors. I mean, economic statistics, some economy factors. So when you are dealing with this, the technical analysis usually works very nice. So first of all, if you remember, we have traded first this bounce up, this ABCD patient. Once OP target has been hit, we said that could be some downward action here. And on Friday morning, when we saw the price behavior, the way how market behaves, we said that probably should be another leg, and it could be some acceleration down. So we called you to not take any long position on the euro currency. Actually, all this stuff is based on the pattern that we first recognized on the dollar index. As you can see here, this reverse hand and shoulders pattern. On the dollar index, it just looks better than on the euro currency, because you could compare On euro currency, the neckline is a bit more, has greater slope. It's more skewed to the upside compared to the dollar index. But still, as euro currency actually takes the 70% of the dollar index, its relation stands very strong. Our bearish divergence is still here. Market wasn't able to proceed higher with this upper direction and break this level, which is very important on the long-term chart. And I suppose that the next week, it seems that we could continue our journey with this pattern. And the market has dropped back down to these lows. We could consider this ABCD pattern, which our P target stands at 10.15, 10.20 area, is a major daily 618 support, the level that market could reach on the next week. So that's the pattern that we'll keep an eye on. Currently, market stands at the conference support, as you can see, but this conference already has been tested by this drop. So this first test of the conference, reasonable bounce. Second test of the conference. As we said, this upper direction could be faded against the bearish trend on the daily. So that we talked about it within the whole week. And you can see this sell-off is really strong. The same on the dollar index. You can see market here has broken through the neckline, but also stands in the same conference resistance. It means that currently, definitely, we should not think about taking any long positions. It's not only on the daily, but on the high time frames as well, you will see. And we could think about taking the short position, how we better to take it and where we could do this. So on the 4-hour time frame chart, take a look, we have another ABCD pattern, which actually has the same target. And that's another reason why we think that euro could drop more, just because take a look on the market mechanics. First, extension, retracement, extension, reaching OP, retracement, ABCD type of action, got us triple to sell if you remember, completion of the OP target here, and and extension again. So you can see even different type of action here, as you can see different thrusting action right back down. And this market is returned right back to the OP. It means that this is next leg to the downside. This is continuation. XOP stands at the same level actually, 10.20 degrees with the daily target. So here we have the XOP, we have the OP, we have the major 618 support. So as market now is not that oversold and extension legs just has started, so major retracement already is done, it tells us that we could focus just on this most recent leg down to consider levels where market could show the pullback and where we theoretically could think about taking the short position. I suggest that this could be two levels. First is one was 11 or 7, and this level, which is more attractive because it's confidence resistance, 11.20 area. It's confidence resistance level, which will be very nice if market will show some kind of the ABCD pattern complete this level, because that's confidence. It's just more safer trying to take the short position right from here. The only question that we have currently, guys, is that from what point market will start the retracement. It could start it immediately, right on Monday open, the pullback, or it will first hit 1070 XOP with this minor XOP, and only after that will show the pullback. So theoretically, here is possible the action right there. But taking in consideration that market stands on the, on the confidence support, so maybe indeed we could see the bounce immediately on the Monday open. Anyway, no matter the shape of this possible, how of this retracement, how it will happen, keep an eye on the same levels. The numbers could be different because these numbers are based on these lows. If new lows will be formed, numbers will be different, but the structure of the levels will be the same. So no matter from what level market will start the bounce, you should keep an eye on the first level and on the confidence. That's our preliminary trading plan for the beginning of the next week.